Hey folks, and welcome to the Pipnotic Symposium for the 2nd of January 2023. I have to get used to saying that. Hope you're all doing really well. We are currently in Lombok, which is an island east of Bali. We've been around the Gili Islands for 5 nights, and now we're in Lombok for a couple of nights, and then on the 4th we head back to Bali as we draw closer to the end of our Christmas holiday. But I haven't been on the computer a lot at all, which has been actually really nice. So I've really taken the opportunity to unplug and just hang out with my family. So that's been a real treat. But I'm also looking forward to getting back at it. So there are a couple of things we're going to talk about today, just like some general things. I think not so much trading, because spreads are really wide still, and so it's maybe not such a good idea to get too excited about trading. Maybe volume's quite low as well at the moment. But I've asked my son to help me organize the content of the forum, the Discord server, and he's done some interesting stuff. What I've asked him to do is to try and organize the threads in a way that makes it, easier to find the information that you're looking for. And so if we have a look at this one, this is the one that he created. And so here, you have everything is created now as a thread, so you can create like a new topic, and then it comes in like this, and then people can react to it. They can type their answers and their questions. And the cool thing about that is it keeps the content that is active and currently being discussed at the top of the list, which I really like, instead of having to go back and search for old threads and whatnot. That can be really annoying. And so by doing it this way, I think that we can keep all of the fresh topics that are most active at the forefront and visible. Okay, so this is something that I'm going to do. I've changed the technical issues forum into one of these now. It's called Help, and Help includes everything like technical issues, all sorts of stuff. And I've created a bunch of different tags. And if we have a look at these, you can see there's stuff related to supply and demand software, buy and sell zones, asset strength reversion, the histogram, currency strength, and all of these other ones. My account, my password. Some people have problems with their password; they want it reset. Then you can click on this tag, and then I'll get it. So you have to select a tag, and if there's a tag that I'm missing, let me know and I'll add it. Okay, so if there's stuff about your subscription or your private key or the public key, let me know. And also about the operating systems and whatnot. So this is just a really nice way to help organize things, and I think Discord does a beautiful job in doing this. They've really increased the quality of the user experience by introducing these different kinds of channels, these different formats of channels. So we're going to start using those, and slowly but certainly, I think we'll slowly start replacing most of them with the ones that are most interesting. Sorry, that are relevant to the content. Okay, so that is that. So give it a shot, have a look around, participate in the debate, and if you have any questions, let me know. And what I'm going to do now, actually, is I'm going to change this to not a gallery mode, but a list mode. I like this better. Okay, so now it'll look like that. So these will be plugged in like that. Okay, good. What else? Okay, so I've also been thinking an awful lot about the algo trader. One thing that's really cool about the algo trader is that sometimes we have trades like this, a level like this, for example, where price is created and price leaves. So this area is created. It's created when this bar, maybe this blue bar here, closes, so we know that we should be selling here. Price comes back, and then we can get into that trade. But other times, like this one here, price doesn't come back. Price creates the area, and then it leaves. It's qualified when this candle is closed, or however it's configured, and then it just goes, and then it doesn't come back, and it still hasn't come back, and it's still running lower. And so in a situation like that, I think it'd be really good to be able to get into the trade when it's qualified in the situation that the market's really trending strongly. And so I'm working on an update that I have to test that does precisely that. So let me just bring this up. Okay, so what I'm doing in this particular example is you can see that, I mean, we have this area here. This is actually, let's see which one it is. Yeah, so it's this one here. So we have an area of demand, which is created. I'm guessing it's this one here. Okay, it's this one just here. Okay, so this is the area, and price went down, which qualified this candle close, which qualified this, and now it's kind of sitting away. It's consolidating or holding away from this area of supply. We don't know if it's going to come back. Maybe it will come back. Maybe it'll slowly wriggle back up to here and then go down. But maybe it's just going to go like this, and it's going to go, and it's just going to leave. We don't know what's going to happen. And sometimes price does come back, and other times it doesn't come back. I mean, when this area here was formed, this is a very big area. It was formed here, it closed here, and price left. And now it's slowly kind of feeding back into this price, this liquidity void here. But we seem to have kind of just met kind of the 50% mark just here, and this is where we left from. And so maybe we're not going to come back up to this area. It doesn't mean that we don't want to trade it. It just means that if we were going to wait until price came back up here, maybe we'd miss the boat. Okay, so I'm trying to find a way to capitalize on that in the situation that price doesn't come back. And if we look at this one here, I mean, the software has marked off this area here. It's drawn this box here, which is the new entries for these. The difference being that the stop is a lot bigger. Okay, so if we just take this, and I just mark off this box, and then I'm going to put it in the old configuration, we're just going to see how they differ. Alright, just had to close WhatsApp there ringing in the background. Okay, so let's go here now. We'll change the configuration so that we have enable release mode. We want to set this to false. And so now you'll notice that this box here will look a little bit different. Let's give it a second to update. Okay, so now it looks like this. Okay, and so the entry would be a limit order here in the current configuration, but in the configuration that we just saw, as soon as this candle here closes, it gets in at market. Okay, and it won't get in now because price has already traded more than one period after this candle has closed. So it'll enable the robot to take a trade anytime during this period, but as soon as this period closes, the window of opportunity closes altogether, so it won't trade this now. So if I turn it on, it will, oops, let me change the configuration back and delete this. I mean, it won't take this trade because we've already moved outside the window of opportunity. So it'll show it, but it won't do anything about that. Okay, and so, I mean, there are a few different things here that I think are quite interesting. And I've been really racking my brains trying to figure this out. And essentially we have a situation like this where price does this and then leaves, then comes back and then goes. And we also have a situation where price does this, it consolidates, it leaves, it consolidates away, and then it leaves. That's another scenario which is very likely and very common. And other times we have a scenario which is when we normally get stopped out, where price either holds away, consolidates, and then comes back and then goes through, or it just goes away and then it goes through. Okay, these are also equal scenarios. And so, I mean, we have a few different scenarios there, and I think that, I mean, this current configuration would not fare very well in this market environment, because, I mean, we get in here at market, okay, and then price just kind of consolidates away, and it comes back, and then it stops us out. But it would be cool if I figure this out, not rather but when I figure out how to do it, if we could do this, where we have the area that's formed like so. Price leaves. That was a terrible line. Leaves. We consolidate away, and then we slowly but surely start to move back and beyond this area of, in this case, supply. So that'd be a really beautiful scenario as well. So this is another scenario that I wish to add, but I haven't added it just yet because it's complicated, because it's very complicated because you have this area that's formed here, and you have to wait for price patterns to occur that would lead one to believe that price is going to move away and through the area that the software, the buy and sell zones, identified in the first place. And so this is really complicated, and I don't know how I'm going to solve this, but I'm going to try. But for the time being, we're going to have two scenarios, and those are the two that I spoke about, where we have this one here where price forms an area of, let's say, supply. Price moves away, we put a limit order in here, price comes back, we get filled, and then we go to our target. Or this one here where price moves away like that. When the area is qualified, as soon as the rectangle is drawn in the box, it opens a market, puts our stop up here, and then prices just continue moving, bleeding lower. These are the scenarios that I think that are very, very good. Because if you think about it for a second, the scenario here where price leaves away, consolidates, comes back, and then goes through here, I mean, we're just going to get stopped out, and that's fine. But I need to find out how to quantify this where price moves away. But this would actually be a combination of the asset strength reversion algo and the supply and demand. So I'd have to find a way to marry those two, which is, just thinking about it here while I'm speaking to you, is quite complicated, because there's so much more that I have to consider. So I'll have to figure out how to do that. And I don't know how I'm going to do that just yet. But I want to test this first. I want to test this because I think there's a lot of merit to that. And I think what we will see as a result of trades being performed that way, if we go to a different time frame and remove that, what we're going to see is a situation like that is that we're going to see, okay, this one here worked out beautifully. This one's qualified. When this candle closed, we opened a market, we came back, we didn't even get close to the stop, and then we left. So we had a lovely trade there. But we'll probably see a result where we have a ton of losses, small losses, and then a few huge winners. Okay, and if we have a look at why that would be the case, and let's have a look. Let's have a look at why that would be the case. I mean, let's look at this one here, where we had, okay, this one here, price came here, we opened the trade right here, price went up here, and we got about a 1 to 1.5 or so. The trade is closed maybe, price comes back, fills us, and then we get our target, we come down here, we open the trade here, we maybe get stopped out, or we go to break even. Probably we don't get stopped out because price would have to go 1.5 times or 2 times the size of this in, and then price moves away into profit. And we have situations like this where, and this is one of those few home run trades where the area is defined. Let me zoom in. It's qualified when this candle closes. It holds away, and then it just keeps going, and it doesn't ever look back. Okay, and so if we just do the math there, so we get in here, our stop's going to be here. It's a 65 pip stop, and the target is, the target so far we are at 235. So that's almost 4 times. Okay, so we're going to have some huge opportunities. Okay, so we're probably very likely in a configuration like that going to, as I mentioned, see many small losses and few huge wins. And as I mentioned, several years ago, a very good friend of mine from Copenhagen and I, we wanted to recruit traders to trade for the fund that we've actually made. And we spoke to this guy. He was a lovely guy. His name was Klaus. He was from a very small town in Jutland in Denmark. And we gave him our tools, so the tools that we all have, and we asked him to to trade for a period of time so that we could watch him. And he was a remarkable individual, because he was able to stick to his plan to a degree that I've rarely seen, where you would just have like a bunch of trades where you would just take your losses, whatever, and then you would have the trades that would just clean up, And I think his average risk to reward was 1 to 7, I think. So he was winning about 20% of his trades, but the winners were so much bigger than the losers that it didn't really matter. And so he was highly profitable. So that was amazing. And I'm thinking that this configuration of the robot will actually be more of a set and forget solution than the normal configuration, in that it's going to be able to capitalize on these huge trades. And so I'm just thinking out loud here, but what we could do, which might be really interesting, is take trades when the histogram is in a sell zone, so selling in sell zones, so selling here. Okay, so taking trades when price is up here, when prices are in the sell zone, we look for these patterns to occur and then we sell. Okay, that would be really interesting. Like here, we're in the sell zone. Is price going to turn around and go up? We don't know. But this one here, we had this area that was formed down here. This wasn't a qualified area, but essentially what I'm trying to say is this isn't a very good example because we have such a price imbalance there. So if we look at this, where we had, where we had this. So we had this area here that was formed, and we were in the buy zone. We started to get these signals to buy, and so just buying at patterns here, because this is likely the beginning of the bullish cycle. And so if we draw that, it would go from here to here. Okay, so this is the end of the bull cycle. This is the beginning of the bull cycle. Okay, so now a bear cycle begins. It goes like that, and that ends, and the bull cycle begins like so. And so we would be getting in, we would be buying at the beginning of the bull cycles and be getting out at the end of those and getting in at the beginning of the bear cycles. Okay, but this, as all of the ASR users are very well acquainted with, is very difficult. And it's difficult because this happens, where you have buy. Okay, that was a profitable one, but you'd have to manage it again, and you'd have to manage it yourself. Buy here, and while these very often work, almost always work, if you're managing them, they don't. So if we would have had the algo and it was saying, okay, we want to buy here in anticipation that this is the beginning of a huge bull cycle, and we would have been stopped out once, twice, 3 times. And then this one we would have gone into 3 times. So let's say we would have gotten in here, and maybe we would have managed to get this whole move. Who knows? But as you can see, it's very, very difficult. So I don't know how I'll do that. But the idea is that this new configuration, when I'm done writing it, will enable us to leave it more in a set and forget configuration. I have it running on a small live account, trading micro lots because I need some sample data, and I'm going to trade a few different currency pairs. So I'm going to do the British pound, Japanese yen, the euro, Australian dollar, the euro, American dollar, and for example something else that's not correlated with the American dollar so much, or the British pound, just so that I have like a nice spread. But pairs that are very volatile, so pairs that really move far. And I'm going to let it run for a while, and then we'll see how we go, because I think this could be a really cool experiment, and I think highly lucrative once I figure it out. Yeah, but I'll keep you posted as to what's going on. But apart from that, I'm not trading at the moment. We're kind of on holiday, so I only got one eye on what's going on. But I'll get back into this once we get back to Bali in about one. We have 2 nights here, and then we go back, and then I'm back at it full throttle, which I actually look very much forward to. But I will try and have a look at some of the comments that came in. There are a few comments about symposiums. As a matter of fact, there was one that came in. This was about the Euro-American dollar. Let's just have a look at that very quickly. Euro-American dollar. Let's have a look at this. And the question is where is this going? Well, we don't know where it's going, but we can see. Let's go on the monthly chart. We can see that we are, I don't know what's back here because there's no data, but we are, we've kind of reached this base here. If we look at it, we're getting to the upper edge of it. We had this one here. We spoke about this a long time ago. Price came to it. You can see we poked into it, and now we left. And so we're seeing the euro build up in strength relative to the American dollar. We're seeing a few other things like this happening as well, which is also telling us, you know, slowly higher. But we don't know if this is going to hold. But what we can see is that we, in the most recent swings, doing this, you know, we've moved below here. We're actually here, because we could kind of maybe go lower from here. It's difficult to say, but I think for the time being that there's a lot of going on fundamentals. We're kind of trying to shake off the recession. There's a lot going on. Interest rates are going up, which is a double-edged sword, because while interest rates, they are good for providing a yield, they're also good at causing recessions if it happens too quickly after a previous recession. Because when recessions are in place, typically interest rates are low to try and get people to spend, giving away money. But if you try to get out of the recession too quickly by hiking interest rates, a lot of the people who borrow the money are going to be over leveraged, and they're really going to be sweating. And this is going to cause companies to go broke. This is going to cause people not to be able to pay their rent. So this could cause really bad things to happen, which will affect the key figures that the central banks keep an eye on when kind of trying to figure out where to place interest rates and how to stimulate the economy. And so it's kind of a difficult one. So I think for the time being, just trade technically, keeping in mind that interest rates are going up. And while this is a good thing, as I mentioned, it is a double-edged sword. But we are kind of getting to this area here in a weekly area of supply. Oops. And this is one of those areas of supply that I'd be very comfortable selling at, because it's one of those, you know, price goes up, we sit on the area for 1 or 2 periods, and then we leave. Okay, so something like this is telling us that, there was a lot of selling after that. So maybe we can expect a bit of a sell-off, a small sell-off, as prices rebalance, either back down to here or essentially down here to the base here where we had kind of this price point release. Let me go to the daily chart and have a quick look. Yeah, so we've got price imbalance here that should be addressed. This stuff is pretty efficient, relatively low volume, but then we are pretty high. Okay, we do have this historical value here, so this is going to be a little bit maybe difficult for prices to get through here as well. So up here, we're currently sitting on this one here, which is essentially a reaction to this. So yeah, as prices continue to wriggle higher here, I'm thinking maybe we're gonna wriggle lower. Okay, but that's my immediate perspective on that for the time being. We'll have to watch once the data starts to be released, so we can keep an eye on jobs in Europe and America, and the interest rate, the frequency at which interest rates are being increased. All of these things play a huge role. Okay, good. Well, I'm going to knock off for now. If you have any questions, let me know, and thanks for watching.